Good morning, good afternoon, good evening, wherever you may be. This is Sid Norris from Elliott Wave Plus, and this is the April 19 of 2025 edition of my weekly counts webinar, where I will go over all of my Elliott Wave counts and associated Fibonacci price targets for many of the world's major stock markets, commodities, currencies, and bonds. Hurst cycle analysis, as well as a number of additional forms of technical analysis, will also be considered on virtually all items. Before we get started, I'd like for you to be aware of my disclaimer. It's at my website, elliottwaveplus.com. Please go to the site to read the disclaimer in full, and I'll show you how to find it there. Go to any page on the site and scroll all the way down to the bottom of any page and click on this Terms of Service Disclaimer tab. And there it is. It's there all the time. Please go there and read that in full. If I were to summarize it in one sentence, it would be there's risk of loss in all trading. All right, let's get straight to the charts. Here we go. Oh, and by the way, welcome to I sent out the invitation this uh, week to any active basic plan and crypto plan or trend plan subscribers. So the two lower price tiers get a chance to see what the weekly webinar is like. The weekly webinar invitations normally only go to the Pro Plan and Premium Plan subscribers, the top two price tiers. So welcome to those folks. Uh, and so to kind of see what's happening in the markets right now across the board, a fully comprehensive look. So the first thing we do each week is look at the weekly trend charts. There's no Elliott wave or Hurst cycle analysis on these charts. And I'll turn off the video of myself. So it doesn't cover up anything up here. So the weekly trend on the S&P 500 is down. It's been down since March 7. It has flirted with the adaptive moving average on a weekly chart a couple times the last 2 weeks. Has been unable to close back above that. That would very likely change the trend from down to up. And so the trend is still down on a weekly chart on the S&P. Same thing with the Russell. The trend has been down since February 21 on a weekly chart and remains to the downside. You can see on both of those charts, though, here that low that we saw the week before last um, fired a what I call a green stripe on my money flow versus RSI indicator. And last time we got one of those green stripes was way back in March of 2021. So pretty deeply oversold 2 weeks ago at that low. Um, and same thing happened on the Russell. We got a green stripe there, and those are fairly rare. The developed stock markets around the globe, excluding the U.S. So this would be an ETF that includes the Canadian, the UK, Germany, Australia, primarily the big developed countries. Stock markets around the globe, excluding the U.S., the weekly or the price has moved up enough now that it is actually flirting with the adaptive moving average on the weekly chart. So the weekly trend here has returned to neutral. Neutral. Bonds, the weekly trend is down now for a second week in a row. You can see we got kind of an inside bar last week on bonds. You'll see on my wave count that I believe that that is bullish for bonds. Um, but the weekly trend officially is still down. This is interesting news since we pay a lot of attention to commodities here at Elliott Wave Plus. The Dow Jones Commodity Index has rallied enough now to no longer be in a downtrend from on a weekly perspective. The weekly trend is now in neutral, and it didn't quite move high enough to get a new green buy zone box. So these colored boxes are um, indicators based on Perry Kaufman's adaptive moving average system, and it didn't quite fire a new uptrend on commodities, but it's very close. We're back to neutral. The U.S. dollar index, the weekly trend continues to be down. One interesting aspect on a couple of interesting things here on the U.S. dollar index is that we got a green, dark green zone, so deep, deep oversold territory. We don't see, the last time we got a dark green oversold reading was here, and that was followed by a substantial move to the upside. Also, last week, the U.S. dollar did not make a new low below the prior week. So, could it be trying to put in a bottom here, a temporary bottom, and put together some sort of multi-week bounce? I think it is. I think that's happening, and we'll get to that later. Dow Jones Commodity Index. This chart is extremely important as it starts back here at the 2016, the January or February of 2016 low, a very large cycle trough low in commodities. And we got a wave 1 and a 2 and a 3 and a 4. And I think that we're just getting started on a wave 5 to the upside in commodities. You can see that wave 4 did not move down into the price territory of wave 1. And even more important on this chart is this 4.5-year Hurst cycle trough moniker right here. And that occurred back in August of last year. So commodities in a somewhat stealthy manner have moved up. From that low in August of last year, and I believe started with a leading contracting diagonal, and then got a fairly deep wave 2 in 3 waves. So theoretically, we will be ready on commodities for a wave 3 to begin. I believe it has begun. Within the 5th wave. So 5th waves in commodities sometimes can be extended waves. And this is a pretty big deal on my work across the board. And on the Dow Jones Commodity Index, I think that crude oil and energy, especially crude oil, will lead the way to the upside. Here's another bullish chart about commodities I've been showing in recent weeks. And it shows that commodities, when priced in this stock market, have moved down in a channel from June of 2022 down through December of 2024, and now have broken up out of that channel. So this means that I expect for commodities to be stronger to the upside than the stock market moving forward. And there's a couple of other important notes on this chart. This is, if we looked at a very long-term chart of this, we'd see that this low in April of 2020 was probably the end of 5 waves to the downside in commodities compared to the stock market. From way back, from 1942. And at that low, energy and material stocks made an all-time low as far as a percentage of the S&P. There were only 2.1% of the S&P at that low, down from 17% in 2008. And if you looked at a really long chart of this multi-decade chart, this low and this recent low here would look like a double bottom, and the chart would look like there was a tremendous amount of upside the next available in commodities as opposed to the stock market. So I think it's going to be very, very important. We're also seeing a bullish divergence on this chart at that 2024 low to, I think, key in on be very aware of what's going on in commodities instead of just being having tunnel vision regarding the stock market. This chart I've been showing and shows growth stocks divided by value stocks. So in November of 2021, the growth stocks made an important peak in relation to the value stocks. And now it appears that we put in kind of a 1 and 2. And it is what this chart suggests is that there's going to be, the recent narrow, extremely record-setting narrow market where the Mag 7 were dominating. It's going to change now, and there's going to be a move, I believe, into spreading out into a lot more stocks. Many of those stocks would be considered value stocks in comparison with the typical large cap tech growth stocks. So I think we will see a broadening out in the markets. This is a monthly chart of Goldman Sachs Commodity Index and shows that we very likely, very recently on commodities made a 9-year cycle trough. And we could see and notice from that April or March or April of 2020 low, we got a 5-wave up structure there. So A, B, and then a gradual ending contracting diagonal for wave C in 5 waves, 1, 2, 3, 4, 5. And it's starting to pop off of that low, and I think that's just the beginning of something much larger to the upside. And I think crude oil will be the early leader there. Then we're going to the S&P and the Dow, and something I'm going to do different this week as it is holiday weekend. I don't want this webinar to go too awfully long, as I'm going to look almost exclusively at the weekly and the daily charts. Like I say, very little changed. Question based on charts, will you say this is start of a secular bull market in commodities rather than just a cyclical pattern? Um, no, I wouldn't go as far as to say that. I have my own terminology based on Elliott wave and Hurst that I apply to these charts. And all I can say, I'm willing to state there is that I think we're going to be seeing commodities be stronger than the stock market over the next at least year, maybe 2 years. So on the Dow Jones Industrial Average, I'll show the monthly on it. It's the longer term outlook for the stock market is quite bearish. And the reason is on the Dow Jones Industrial Average, we recently hit a trilogy of long-term Fibonacci targets for the end of a 5th wave up that would amount to the end of 5 waves up from the 1932 low. So one of these would be the end of the 5th wave up, a wave 5 that started all the way back in 1974. Another one would be the end of typical target for the end of a 5th wave up from the 2009 low. And another one, it would be the end of a 5th wave up, typical end of a 5th wave up from the March of 2020 low. Actually 2000, say 74, 2009. Yeah, March of 2020. So all of those long-term Fibonacci targets have been hit. However, up from the March of 2020 low, I don't think we have a completed five-wave structure to the upside. I think what's going on is it's putting in an ending, contracting, diagonal, where each leg subdivides as an ABC zigzag or something from the zigzag family, like a double zigzag or triple zigzag. Wave one would be the longest in a contracting diagonal. Three would have to be shorter than one, and it was. Four would have to be shorter than two, and it was. And so I think we've started now into the fifth wave up of an ending contracting diagonal. You'll notice that I've got an A, B, C zigzag for wave one, A, B, C for wave two, A, B, C for three, A, B, C for four, and yes, this is a big deal. Then the movement down into the recent low that occurred, I believe it was on the Wednesday before last. I think in the Dow Jones Industrial Average carved out a very clear three-wave structure to the downside. Um, and here's a closer look at it on the daily chart. So A, then an expanded flat for B, and then 1, 2, 3, 4, 5 for wave C, and they completed an A, B, C zigzag. Now, in the case of the Dow Jones Industrial Average, they did not make a new all-time high right here. So something that kind of complicates the issue on the S&P is that it did make a slight new all-time high right there. So the count has to be a little bit different there. But I like the roadmap, the Hurst roadmap on the Dow Jones Industrial Average better. It's more well behaved, and I think the subdivisions are clearer than they are in the S&P. Here's a live Hurst cycle analysis chart on the Dow Jones Industrial Average. I start this one using data just prior to the cycle degree wave 3 peak in the year 1966. And so it's able to look at the price action across here and decide that, yes, that 1974 low is likely an 18-year cycle trough. That's the largest cycle trough that the Hurst system, and I'm using sentient trader software, can figure, was programmed to figure. And importantly, and I like to do this, I'd like to make sure on these analyses that the uh, position of each trough makes sense. And so this puts the large cycle trough low at the 1974 low. Now, during strong wave, extended wave threes, like we got from 1982 to Y2K, it's many times hard for it to decide where that goes. So I'm going to move forward from that. And it puts a 9-year cycle trough at the 2003 low, an 18-year cycle trough at the March of 2009 low. And then moving forward from there, it puts a 9-year cycle trough low at the March of 2020 low. I think that's correct. And then moving forward from that low, it puts a 4.5-year cycle trough low at the October of 2023 low. And notice that within each 4.5-year cycle, there are 3 18-month cycles. So moving forward from that low, this would be the October 2023 low. It's putting a 40-week cycle trough at the August low of last year. I think that's correct. And notice that this represents an 18-month cycle. But not all 18-month cycles are identical. As a matter of fact, they vary, and that's a rule within Hurst. And so the way we can kind of determine where that's, so if this 18-month cycle had been the same length as the average of the last six 18-month cycles, it would have bottomed in January. But that obviously was not the end of the 18-month cycle. And so we move down to the next lower cycle. This is this light green would be a 40-week. Hurst is, I think, correctly putting that 40-week cycle trough, the last one that occurred in early August of last year. And then it figures from there, this next 40-week would be the same length as the average of the last six 40-week cycles. And so that is suggesting that this 18-month cycle is likely going to bottom here. And that was in mid-March. But as we continue to move in and look at these cycles, so there's that 40-week cycle. Each 40-week cycle should contain two, and this is darker green, 20-week cycles. And so that that spreads this nest. So I call this a nest. Hurst cycle nest of troughs. So typically in Hurst, nests, the reason you get these nests is because there's a number of cycles that typically bottom together. The 18-month, and this green line is the 40-week. This would be the 20-week, the 80-day. And if I were going to pinpoint on this chart where this nest, this kind of staggered nest bottoms, it would be right there. And that low, let me get an eraser here now, occurred on that nest of right here occurred on approximately, or is going to occur theoretically on April 19. Well, that's today, April 19. And so what the composite line, that's this orange line, does is it takes all of the cyclic information from all these different cycles. And there's a bunch of them. There's an 18-year, a 9-year, a 4.5-year, an 18-month, 40-week, 20-week, 80-day, 40-day, 20-day, 10-day, and 5-day. And it gives them each equal weight. And it develops this composite line and what it suggests. So it's pretty obvious on this chart that Hurst thinks that this low is probably, it isn't certain yet because it'll put a stack of diamonds under there down here. But it is probably the 18-month cycle trough. And out of that 18-month cycle trough, and let's take a little bigger perspective here. So this would be a 4.5-year cycle right here. And that subdivides into three 18-month cycles. And so the middle 18-month cycle is typically more bullish than the first 18-month cycle within a 4.5-year cycle. And then the final 18-month cycle of the three within a 4.5-year cycle is more bearish. And so what the composite line is telling us here is to expect a rally in the stock market through approximately October 20. And so there's I've taken these dates and maybe I think that was October 20. Let me make sure of this. Yeah, October 20, 9/6. So this needs to be October 20 over here. And so the difference there between those dates and what I had prepared on there is I think I prepared this during the day before Hurst had a chance to see the Thursday price actions. And so many times there's a very subtle little morphs on these dates. And so the regular subscribers understand that these dates from week to week, when I do a new Hurst, might adjust a little bit here and there, but for the most part, do not adjust in a large way unless Hurst all of a sudden decides, oh, well, it shouldn't have put this 40-week cycle trough here in early uh, August of last year. Maybe it should have put it here or here. Now, I think that it didn't put that 40-week cycle trough there initially, and I was having to force pin it there for a while, thinking that was likely it, and I no longer have to force it. Hurst gradually got that, I think, correct. So the general roadmap is bullish through most of the rest of this year on the stock market. Now, when I first moved back to this, it was on that Wednesday before last, where the announcement came out that the uh, retaliatory um, tariffs were being removed on all countries except for China, and the stock market intraday went up 3,000 points. The Dow Jones Industrial Average went up 3,000 points. Well, that was a big deal. And I immediately switched back to this. This was my alternate before, and switched this as the main. And the reason is that day, it was such a large move to the upside that at least in the S&P ES contract, it created an overlap. And it also suggested that, and upon a moment's notice, we could see these deals come together, and this return to, and this includes China, a more normal tariff arrangement. So all these countries have generally been tariffing each other for a long time. It's been more common for countries to tariff anything imported from the United States, and whereas the United States wasn't necessarily tariffing very much. And so I think that this is probably going to normalize here fairly quickly, this whole tariff situation, and we'll start seeing the movement, uh, some additional movement to the upside. But that was a big enough up move that from an Elliott wave perspective and a cycle perspective, it made a big difference. In cycle analysis, the way Hurst works is it won't for sure put a large cycle trough on a low until it's seen enough upward movement from that low, so it can be a little bit lagging on those large cycle troughs. But as you can tell, even though it hasn't put a stack of diamonds down here, the composite line thinks that's probably it. And I think it probably is the low, the Wednesday before last, the 18-month cycle trough. Well, this is a huge deal. As that there, I've been talking for a long time about how there was a large cycle trough due in May. And I think that brought the 18-month cycle trough into April. That huge update that we saw in the markets, and that's going to affect everything. I was warning ahead of that announcement and before that low on Wednesday that I did not think it was a good idea to be short the markets right now, but that they were probably much closer to the end of to putting in this 18-month cycle trough than they were at the beginning of some larger move to the downside. And that turned out to be excellent advice. Um, so we've seen enough upward movement on the daily trend charts that we're no longer in either a pink sell zone box or a green buy box. Uh, in order to see a new green buy box occur on the daily chart, we'd need to see probably this blue adaptive moving average, or that's the ATR volatility stop, jump down below price, and hasn't quite done it yet. But just to finish on the Dow, the upward movement, I think, will generally see upward movement into mid-July next, a pullback into early September, and then uh, this might put in a triangle right here. And we could see a thrust, a really aggressive thrust up out of the triangle starting in early September and moving through late October. And also, as you get further into the fourth quarter, the bullish seasonality could take shape, and it very well could be that this will morph into something that doesn't top until later in the fourth quarter. Um, this is a big deal. This is the weekly, no, the sentiment conditions on the Dow Jones Industrial Average currently. Then I'm using a daily sentiment conditions template on this. The commercials are all heavily along the Dow Jones Industrial Average. What this indicates to me is there's a lot of flight into what is considered to be a safe haven stocks, blue chip stocks, out of the Mag Sevens into the blue chips on the part of money managers, and they are heavily long currently as a percent of open interest. They're heavily long. They're as long as they have been at any point in the last 6 months, and they're as long as they have been at any point in the last 12 months. So commercials are all heavily long the Dow. Also, we're still in a period of bullish seasonality through the end of April. So I've used these daily sentiment conditions charts to show commercials positioning, retail positioning, recently quite bearish at this low, and seasonality. And those charts, once in a while, I'll show them in the webinars. But for the most part, those go out to premium plan, the top tier plan subscribers every night, Monday through Friday. So now moving to the S&P. So the roadmap on the S&P is a little bit, as far as Hurst goes, I think it's different, and I can't force it to be the same as with by repinning where it's figuring some of these troughs as the Dow, which is weird. Part of that might be because the S&P made new all-time high in February, whereas the Dow, so all-time high, is still standing from December. So um, this is generally the same idea I'm showing on the S&P, that we're in an ending contracting diagonal, and in the case of the S&P, it still wants to think that the 4.5-year cycle trough is due in May and not in April. But I think it's probably going to change its mind. And so I'm really taking a few liberties with the Hurst here and figuring that the 4.5-year cycle trough here, not just an 18-month, is probably in, and we're probably going to be in a fifth wave, an A, B, C zigzag up, very likely to new all-time highs by the time we get into December. So, and this blast that we saw Wednesday before last to the upside, I think was very likely a wave one of an ongoing ending contracting, or I'm sorry, leading contracting diagonal. And the reason I think that is because it was a pretty long wave one, and that suggests that we'll be in a contracting diagonal where one is the longest, three isn't quite as long as one, and five is shorter than three. So there's the S&P daily. Same basic idea. Generally, I think uh, we're probably in the wave two pullback now. And when we get to, later to, I've got a number of items that I think you can use as a clue as to when this pullback is going to bottom. One is the VIX, the Hurst cycle analysis on the VIX, and another one is the new wave count and expectation on Bitcoin. I still believe that Bitcoin is still a measure of risk on and risk off. And I can tell you that Bitcoin is likely to get a pullback next only through late April before moving higher. And the VIX, I think, is expecting a pullback through early May. So I think late April, early May is going to be the spot where might start looking for the finish of an ABC zigzag down for wave two next. And we'll talk about that a lot as we move on through. um, Weekly sentiment. So uh, on the I have something called daily sentiment charts, and I have weekly sentiment charts. And these go out to premium plan subscribers. Every week, and once in a while, I'll show these on certain items during the weekly webinar. And I think there's if we have what I consider a perfect storm or a near perfect storm of bullishness or bearishness, I'll make a note of it. So, for instance, 10-year bonds, there's a perfect storm of bullishness currently. And what that means is that commercials are as long on 10-year bonds as they have been at any point in the last 12 months. And retail is recently quite, fairly recently, quite short or quite bearish. So the combination of the retail traders being hugely bearish and the commercial traders or investors being hugely bullish is a bullish condition. The commercials end up being right, and the retail traders are often dead wrong at major trend changes. Just to show you a couple of more important sentiment charts. That's a daily. That needs to be. I need to add a weekly to that. But anyway, on the daily sentiment conditions on crude oil, notice commercials are all heavily long and retail is heavily short. Very recently, that's a perfect storm of bullishness on crude oil. It's suggesting that we probably have seen the low for the year to very recently on crude oil. Euro is bearish. Commercials are heavily short. Retail at 82% bullish. That with the money flow versus RSI is throwing up a major warning sign of a top on the euro. Would look for a pullback on the euro next. Stronger dollar. So I think we're within what that suggests, I think, is we really are very near the end of this. The worst news about the trade war, and we're going to see stocks moving up. We're going to see commodities moving up. We're going to see the dollar moving up. We're going to see a restoration of confidence, at least for a while. And we'll see bonds moving up. And that would be a restoration of confidence there as well. And I think all of those stars are about to align. And So on the S&P weekly sentiment screenshots, perfect storm. Commercials heavily long, retail heavily short. We got a green candle within a thick green box. Perfect storm. It just happened on the weekly chart on the S&P. So that's this chart right here. Um, this chart, I think, the only reason I'm showing this chart right now is to show you the overlap that occurred on the ES contract on that huge up day, the Wednesday before last, as it caused an overlap. So this was the all-time high in the S&P. So if you were strictly counting the S&P as a 1, 2, 3, and a 4, we got an overlap on the 4. That's a big deal from an Elliott wave standpoint. Um, and therefore, that what that leaves, or if someone is deadly bearish, is that this would be a 1 and 2 and a 1 and a 2. And that would mean that we would be on the cusp of a wave 3 of 3 to the downside. It would be much lower than the most recent low. Well, here's the big problem with that. Here is the big problem with that, and that is that an 18-month cycle trough is due now or no later than next month. So I already showed you this nest that points to a significant large cycle trough due now. So this I don't think this is a 1-2, 1-2, and it just keeps heading south in aggressive wave 3 manner. There's not enough room on the Hurst cycle timing chart for that to occur. Okay. A couple of additional interesting charts shows that the all-time high in the stock market priced in gold was back in 2000. And the most recent new all-time highs in the stock market didn't even come close to the all-time high on the S&P when priced in gold. Now to the NASDAQ and Russell. Okay, we'll start with we'll move faster here. The NASDAQ composite. On the NASDAQ composite, I think I can see a 5-wave down structure there. So this is what's different. 1, 2, 3, 4, 5. That's hugely different than the Dow Jones Industrial Average. And what that suggests is we're going to see blue chips probably stronger for the rest of this year than we will the large cap tech. But notice that Hurst is very, very much the same. In matter of fact, it was on the NASDAQ composite that I first wanted to call that Hurst was suggesting we would get an 18-month cycle trough in mid-April and a bounce from there. And it's still suggesting that that is very likely the 18-month cycle trough and very likely moving up here in a wave 2. Probably going to flirt with the all-time highs by the time we get well into the third quarter of this year. Also on the NASDAQ, it's not as clear on the NASDAQ um, as a 5-wave down structure. On NASDAQ, it kind of looks like a 3-wave structure, but I've taken some liberties and calling out a 1, 2, and then a quick 3, 4, 5 down here. And so if that was a 5-wave structure, we wouldn't see a new all-time high by the time we get to well into the third quarter, almost to the fourth quarter. And also notice that on NASDAQ, it's not phasing this the same. It's only calling this an 80-day cycle trough. Uh, Still, it is bullish through early May, then down through mid-June, currently on the Hurst on that. Let's see what the sentiment situation is here. Well, it's not as bullish as it was on the Dow or the S&P. It's not as bullish. So I think we're getting this rotation out of tech and it's spreading out into some other items. We got down to a 9 DSI. The DSI is the daily sentiment index, and so on that day of that low, or actually of this low here, there were only 9% of retail traders that were bullish. So that is usually very bullish. When you get down into single digits on the DSI, no matter what, it's pretty bullish on the stock market. And we also were deeply oversold on the money flow index versus RSI, enough to get a dark green stripe. We haven't seen a dark green stripe on this chart since March of 2020. So deep, deep oversold territory. But commercials aren't fully into it. They are not fully long the NASDAQ like they are on the S&P and on the Dow. And so this is also suggesting that this whole Mag 7 bubble thing is probably played out. And now to the Russell. There's a main and an alternate here on the Russell. The main is that the top is in, but the alternate, which I think probably is what's going to happen, is it up from the March of 2020 low. We got a 1 of a diagonal, 2 of a diagonal, 3 of the diagonal, 4 of the diagonal done, and that we still need wave 5 of the diagonal. Now, if that alternate count is correct, that would allow the Russell to move up to this 2727 long-held Fibonacci target for the top, which I'd pretty much given up hope that it would ever get up there, but it still has a chance. Can anyone tell me if this is an ending contracting diagonal, start at March 2020, we got a 1 and a 2 and a 3 and a 4. Does the fifth wave have to make a new all-time high? Must it make a new all-time high above the highs that occurred in November? Excellent, Jacob. You win. The answer is no. And what would that be called if that ends up being the proper wave count, but it falls short of the new of a new all-time high? Truncation, exactly. So that is on all these charts on the stock market that I'm showing you. There's no official requirement that by the time we get into the fourth quarter, late third quarter or fourth quarter of this year, that they make a new all-time high. It could be a truncation, although truncations are rare. But it can happen. But if that's correct, if the wave signal is correct, we'll get an ABC zigzag up into. And in the case of the Russell, let's check this out. Hurst doesn't think it tops until February. So if my main count is correct and the top is in, and this gave a 5-wave down structure, we would still get an ABC zigzag to the upside. So it doesn't matter whether it's the main or the alternate. Still expecting an ABC zigzag to the upside for either a wave 2 or a wave 5 of a diagonal. Now, in the case of the Russell, this really does have the look of a 5-wave structure down. So there's a lot of disagreement on whether it was a 5 or a 3, but the part where we can agree is that I think out of this low, and Hurst was expecting in mid-April, an 18-month cycle trough in the Russell, that we're going to move up next through late in the year at the very minimum in an ABC zigzag. We also are coming off of a deep oversold territory here. The unfortunate thing, and so what we'll talk about moving through the webinar, is that this move to the upside will include everything, I think. If these roadmaps are correct, it'll include stocks and it'll include commodities, but the commodities will be stronger than the stocks to the upside. And so what we'll be getting is a return to inflation. This is what Powell has been talking about being scared of. Now Trump is talking about firing him and putting in a yes man, theoretically. And if he manages to get somebody in there that will cut, I think that will actually exacerbate the inflation that we're going to see, commodity inflation we're going to see next. So on the very short term, on the Russell, I think we probably got our wave one up. That was on the week Wednesday before last. And now we're going to get this pullback for wave two, probably into, let's say, late April, possibly early May. Um, the weird thing and what you get is when Hurst thinks you have a large cycle trough, it's very the composite line is very one-way-ish out of 18-month cycle troughs. And so it's hard to say for sure where that next, how long this pullback is going to last and how deep it's going to go. For that, I'm using a few other tools, namely the VIX, and then I also want to show Bitcoin toward the end. Semiconductors. So, yes, the three times bull is, it's not TNZ, it's TNA. Is that correct? Or URTY, I think, here. Um, I'll take your word for it. I'm a terrible typist, and I'll turn around things and slightly dyslexic a little bit, time to time. Okay. Semiconductors. Looking for a bounce here as well, up through September 22. I think that bounce has begun. Notice that on semiconductors, Hurst was also expecting that large cycle trough in the middle of April, not May. So this price action can work a couple different ways on semiconductors. Either we got a truncated fifth wave up already, so that'd be 1, 2, 3, 4, and a truncated fifth wave, and that's the main count, and that was followed by 5-wave down structure. So now we get an ABC for a wave 2, or we're getting that diagonal, 1 of the diagonal, 2 of the diagonal, 3 of the diagonal, A, B, C for 4 of the diagonal, and we would now get an ABC for a wave 5 of the diagonal. Each leg of a diagonal is typically an ABC. So once again, whether it's the main or whether it's the alternate, we would get an ABC structure up through late in the year. In this case, late September is currently the date on semiconductor index. And so if this is going to be a 5-wave up structure through July 6th, I think it's going to be choppy. It'll be a diagonal. Why? Because of the long wave one. Once again, that Wednesday before last blast to the upside. So I didn't have as much time to prepare this week as I usually have. But I noticed that in many items, we're still very much the Hurst is didn't change much. And so many of these charts are going to look the same. You're going to get these charts in your inbox, but I want to point out a few key factors. One is I think we have a major top on Apple in place. And I think we've got a one, two, three. And in the case of Apple, we could see a triangle here and might see that a fifth wave down through June before we get a bounce. So where Apple's recent troughs are is completely different than the regular stock market. But I do think I see a one and then an ABC for two, and then a one, two, three, four, five for three. Could this be an ABC? And we're done with maybe a wave four here? In the case of Apple, no, I don't think so. I don't think so because it wouldn't fit with that idea of of an ending contracting diagonal still underway. Now, I suppose it could be an ending expanding diagonal, but yeah, Hurst thinks that it only moves up through mid-July and then it continues to be bearish. So no, I don't think there's enough time. I think we will get a fifth wave down in Apple. That's an example of money running away from a very popular large cap tech stock and into other areas of the market. I also think that it's pretty likely we got an impulse to the downside on Amazon. But I think that's probably finished, and we're getting an ABC up into September for that high. I've been bullish on Boeing, and I think we're going to get a five-wave up structure all the way into March of next year. But I would look for a pullback for the wave two next. And notice that and this is the first stock that I'm showing this buy low. So look for these on my screenshots. This is a buy low, what I refer to as a buy low candidate. It hasn't been screaming higher lately. It's been putting in this kind of this basing process. And Hurst thinks it rallies from about now all the way through March of next year. I think it'll put in a five-wave structure. And I think we're probably about done with wave one. We get a wave two pullback. So I think that Boeing belongs in the buy low on the buy low list. So these things take a lot of work, building spreadsheets and things with my buy low list. And I had a spreadsheet that I was putting together with buy low candidates. I'm gonna add Boeing onto that list, and I'm gonna start building the kind of a new list here. Um, And so Boeing, I think, probably his bottom, and so that this would be suggesting buy low, hold through March 2025 at 6. I mean, just some quick notes on some buy lows that I'll try to keep a list of. Another one is a buy low candidate is Disney. I'm hearing a lot of bullish talk about Netflix. So this is Let me see here. This would be hold through stock 326, and this would be 1025. Whoops. March 2026. I'm going to have to change these to calendar. We'll just make it general. And this would be through October 2025. So I'm going to try to list these out as we find them. So Disney is a buy low. If Netflix can rally, I think that Disney can rally, but Disney is in a low position. Netflix is a very, very high position. So these are what I call buy low stocks. That everything looks good for a multi-month rally from about now or very soon. This is suggesting an April 18-month cycle trough and a move up through late October. Google looking for a rally here up into September, but I think Google has put in a 5-wave down structure. Meta, I suspect, has put together 5-wave structure. I think it will turn and start moving back up into July. I'm not including stocks like Google and Meta in my buy low list because they're not low. They're high. Microsoft looking for a bounce out of a 40-week cycle trough up into July. Netflix, I'm actually bearish. There's a lot of talking heads on TV talking about how Netflix is their choice because it is not affected by tariffs. And this is the danger, in my opinion, of uh, making your stock choices based on some narrative that could be temporary. NVIDIA, I think, does qualify as a potential buy low, and I'll show you why. And it's a matter of, so I'm putting NVIDIA on the chart and hold through October 2025. Here's why I like NVIDIA to the upside is the price action on the way down. A, B, C, X, A, B, C. That's a double zigzag. I don't think you can count that as reliably as something other than a double zigzag. Um, I guess you could go 1, 2, 3, 4, 5 for one, and a two, and then a 1, 2, 1, 2, very, very bearish, I suppose, if you wanted to. But can anyone tell me why I would not apply a super bearish count at this juncture to NVIDIA? And it's on the chart. Why would I not apply a the 18-month cycle trough nest due essentially now? And therefore, I'm just not expecting this to just go on and get obliterated. I've been happy to have called for this pullback. Anybody want to guess what percentage of pullback we've seen so far on NVIDIA? 40%, Brian says. Anybody else want to throw their hat in the ring before I show it? The answer is 42%. That is a substantial pullback. And so Hurst is bullish out of this 18-month cycle trough until October. That's enough time for this to take off and have one more moment in the sun before the major top. So up from this low right here, this is the October 2022 low. 1, 2, 1, 2, 3, 4, 3, 4. If that wave count is correct, it's possible that we could see NVIDIA up at 325. It's recently bottomed at 86. So I think this also qualifies. I wouldn't put a tremendous amount of your portfolio here. I think there's lots of buy low candidates available. Tesla, I think, is going to continue to move sideways and up until mid-May. Alibaba, I think, will continue to rebound through mid-May, but it's generally going to puke out down into October, November timeframe of this year. We're still bullish on Zillow. This count as an A in pink and B in pink, C in pink of a diagonal. And then within wave C pink, we would get a green 1, green 2, 3, green 3, 4, 5. Within this third wave, I think we have a 1, 2, 1, 2, 3, 4, 3, 4. And Hurst is bullish out of a 40-week cycle trough next through mid-July. So we'll see if that can take off the upside. I think it will if we get bonds to start rallying in wave 3 mode to the upside. That's still my call on bonds. If bonds are moving up, interest rates are moving down, and that would be a boost to a sector, real estate sector that has been beaten all to smithereens lately for the last couple of years, really, because of higher interest rates. So in the FANGs, um, not as the most bullish FANG stock, obviously, is going to be NVIDIA for me. I am expecting the FNGS to basically rally up out of this latest low, but in an ABC zigzag up into late September. Here's one to put on your immediate radar, in my opinion. It is ExxonMobil. I've been talking a lot earlier about the commodities and looking for it to move up, and I'm adding this to my spreadsheet now to move up through June of 2026. So the wave count on ExxonMobil is from the March of 2020 low, 1, 2, and then 1, 2, 3, 4, 5 for 3, and then an ABC for a very sideways wave 4 and a large cycle trough in 18-month. And it's been a bit sluggish to get going, but I'm counting this as a 1 and an A, B, C ending expanding diagonal at this low. It went right to my fib target. And now it's starting to act up like it wants to go up. Her cycle analysis is expecting a very large cycle trough, a 9-year cycle trough at the mid-April low. So this is bullish, and it's bullish for that just in the very early stages of wave 3 to the upside, I like ExxonMobil. The second, I'm just for confirmation, I'm also counting CVX. And notice that a 4.5-year cycle trough is due somewhere between late April and May 11. So this may have one more slight little pullback, CVX, before it's in very much the same position, same wave count and everything. It's just that I'm not quite sure that this low is in. Could a person buy CVX right now and hold it? Yeah, I think so. You might go through just a little bit of a drawdown on the short term, but I think this is going to be a buy low candidate as well. So I'm going to put that on here. CVX. I'm put it on my spreadsheet up through August of 2026. Walmart, we got the beginning of a bounce that I think will take us up through mid-July, but I think Walmart, the blow off top is in. I'm not expecting any more new all-time highs on Walmart. Palantir, well, I think we're starting into a bounce that will take us all the way into late August out of an 18-month cycle trough. And this is just wave one. Then we get a pullback for two. That's a long enough wave one. That's probably going to be wave one of an ending contracting diagonal to complete an A, B, C expanded flat. Berkshire Hathaway, I don't think has put in its top yet. I'm looking at Berkshire Hathaway to continue to the upside through early September. Berkshire Hathaway owns a tremendous number of stocks, and it has a few that are on my buy low radar, namely CVX, Chevron, and ExxonMobil. I think they own both of those, and some additional ones like these next two, Constellation Brands. Very likely a 4.5 year cycle trough. So this would be an STZ. It's a buy low candidate and looking for it to move up through June of 2027. Now, I haven't put the larger picture wave count on here. I can do that. But I think we got a wave 3 and 4 down through March of 2020. So I think March of 2020 was just like on the regular stock market, a fairly large degree, wave 4. So what's been happening since the March of 2020 low on STZ? Well, I think we started with a 5 wave up for one, and then we got this sideways, wave B, 3 waves down for A, and then a triangle for B, and then a thrust out of the triangle, 1, 2, 3, 4, 5, into that low that occurred in February. I think that thrust is done, and I think that STZ is a buy low, and can expect a nice move to the upside. The next Fibonacci target to the upside is 708. Well, it's currently at 186. This could be more of a blow-off move on this particular stock. Another Berkshire Hathaway holding, Occidental Petroleum. This is also a buy low candidate and bullish until April of 27. And this, according to Hurst, a 9 year cycle trough is due in mid-April. Now, the thing about this, the only thing that's causing me to hesitate just a little bit on this one is that I'm expecting that natural gas, and this is one of the largest natural gas producers, isn't going to bottom until finish its sideways and down correction until mid-June. So I think that this is going to be sluggish to take off to the upside, and a person might be able to wait till mid-June to buy this one, but it is clearly, in my opinion, a buy low a candidate because of the large cycle trough and an incomplete 5 wave structure to the upside from the October 2020 low. Now moving on to the VIX. So I'm going to keep a spreadsheet now um, of these buy lows that I can put in the uh, along with the screenshots moving forward. And I told you that this buy low list was going to get big, and it is. There's already quite a few on it, and I'm not even close to adding all of them during the webinar here. VIX. So I suspect that spike up in the VIX that peaked on April 7 is a 40-week cycle trough. A peak on the VIX, and the next large cycle trough is in November, an 18-month. This also was likely a 40-week cycle trough. So I'm bearish the VIX generally until early November. And that really matches kind of my expectation that we're going to see a rally out of this recent low all the way through late in the year. Is there anything else about the VIX? Well, the daily trend is down. It has been since April 9. This is a big deal. This is the weekly sentiment conditions on the VIX, and the VIX became extremely overbought. And the ADX indicator on a weekly chart was over 60. That doesn't happen very often. And now we've had a couple of pullback candles. Commercials are, for the most part, heavily short on a 12-month look back, which means that they are as short pretty much as they have been at any point in the last 12 months. They're short the VIX. And that peak recently had the retail traders were 77% of retail traders were bullish on the VIX at that top tick. When's the last time we saw anything like a 77? Well, it would be in March of 2020. So this is the second highest VIX or DSI reading that we've seen on the VIX recently. In the last 5 years, it's second only to the March of 2020 panic COVID low and spike in the VIX there. So this is bullish. It's bearish the VIX and is therefore bullish the stock market. Now, interestingly, on the daily sentiment conditions on the VIX, the fastest acting commercials indicator I have, commercials as a percent of open interest, all of a sudden has gotten long. Well, remember, I'm looking for this to represent a major low in the stock market, and this to be a wave one, and then we would get a wave two through approximately late April, early May, and then we would get a wave more upside in the stock market. So it looks like they're positioned for a bounce, and I would agree with that only with their short-term positions. Longer term, they're still heavily short the VIX. This is my kind of proprietary way to view the advanced decline ratio. And the 13-day exponential moving average of the daily closes has a tendency to move up into this resistance zone and then move down into this support zone. And it does it over and over again. You can see how that works. And recently, that low on April 8 moved down below the support zone. And now I believe we're on our way back up to the resistance zone. And so I think that low on the S&P and on April 8 is pretty likely to hold. Um, when the 10-day simple moving average of the put to call ratio turns to the downside, that is going to be bullish the stock market, and you can see it's flirting with trying to change trend directions now. This chart was originally shown by Elliott Wave International to suggest that this rare bearish divergence we got between the black line, that's the S&P, going into that mid-February all-time high, that the divergence that we saw on the cumulative advanced decline line was bearish and suggested that we were at a major top there in early February. The shocking thing is that as I continue to view this, we're not seeing a lot of weakness, not nearly as much weakness on out of the cumulative advanced decline line as we saw weakness in the actual S&P. And that, in my opinion, is potentially bullish, and also suggests we're getting very likely this broadening out from just a few large cap tech stocks, the Mag 7s, et cetera, into a wider um, investment portfolio. And yes, there are a number of stocks that uh, are appear to be putting in a large cycle trough. Um, and are at a pretty low ebb and deeply oversold. I mean, this short list that I put together so far is, and this list is going to grow, especially when we get into the ETFs of the buy low candidates. Suggested there we could get, and at first I didn't like this idea. I didn't think it could happen, but I think it will, a broadening out into more stocks in the stock market. There's a lot of money made recently on the Mag 7s, tremendous amount of money. And a tremendous amount of money on Bitcoin that has probably decided wants to exit Bitcoin, and that money's looking for a home. And I think there's a number of places where that money can go. Okay, now we're moving to sectors. Okay, so last week, late in the week, we had United Health that plummeted. But what was the other healthcare stock that went up almost an equal double-digit percentage? So there was a big loser and a big winner on the same day. I think that might have been Thursday of last week. Does anybody remember? Um, I'll look over here at XLV Holdings. Um, it might have been Eli Lilly, I think. Um, but anyway, they sort of offset each other. But this item, healthcare sector, I think qualifies as a buy low item, but because Hurst thinks that there was a large cycle trough due in early or in mid-April, and it's bullish until April of 2026. So I'm going to add XLV, bullish through April of 2026. And so up from the 2020 low, 1, 2, 3, 4. And now 3 waves up to that all-time high that occurred in September of last year, and then 3 waves down to this low did not make a new low below this 4.5-year cycle trough low that occurred back in October 2023. I think this one is still relatively low and can rally. Currently, the daily trend is still down. But this could be a 1 to the upside, and now we're getting that wave 2 pullback into late April before moving higher. Transports. Okay. There's the Dow Jones transportation average. And if you look at what happened out of the March of 2020 low, it moved up in what I think was a clean, clear 5-wave structure. So I think the top is likely in on the transports back in November of 2021. That was the all-time high, and then we got a 5-wave down leading diagonal, and ever since then, I think we're in this sideways, very choppy correction, a W, X, Y, X, Z correction. And so that's one way to look at it. Notice that when I do a Hurst on this item, it is bullish through January of 2026. But I also am looking at this item. This would be IYT. And IYT, I think we have a little different looking structure that makes more sense to me, and that is that same ending contracting diagonal, unfinished from the March of 2020 low. So 3 waves up for a 1, 3 for a 2, a W, X, Y for wave 3, a pretty clear 3-wave structure to the downside into an 18-month cycle trough due in early April. And I think that low is going to hold on transports, and we're going to move higher through late in the year. So this would be IYT. And up through, I'm going to call it October of 2025, since it's September 28. How about utilities? Well, I think utilities also qualify as a buy low candidate. Up from the 2020 low, a very choppy looking wave 1, a choppy wave 2, an ABC for wave 3, a clean clear ABC for wave 4. And so I think we have embarked on the 5th wave to the upside on utilities, and bullish on utilities. And I'm not sure what the equivalent ETF is here, but I'll just call it DJU for utilities. And it's a buy low candidate until May of 2026. XLE. So I'm having issues with the Hurst on XLE, and I'm having a really hard time squaring on XLE the fact that Hurst doesn't think it's going to put in its 9-year cycle trough until July, but way back here, this low is the 9-year cycle trough on a very important holding in XLE CVX. I'm also very bullish out of this most recent low on as a large cycle trough on ExxonMobil. So I've made this note on the XLE chart. See our chart on VDE for a more immediately bullish view. And so the VDE is something that I added in order as sort of a tiebreaker in if case XLE was wrong. And on VDE, I think that from the March of 2020 low, we got a 1, 2, 1, 2, 3, triangle for 4, 3, and then a W, triangle for X, 3-wave down structure for a Y, for the 18-month cycle trough due in mid to late April. So this, I'm going to reiterate that VDE is a buy low until I'm going to put May of 2026, and I'll probably continue to work on this spreadsheet where I put some more information about, for instance, what would be a 2x bull ETF and what would be a 3x bull ETF. And so on VDE, I know the answer is there's OILU and ERX are, no, wait a minute, I got those turned around. E, maybe they're both of those. No, ERX and OILU are the 2 times and 3 times bullish large cap oil sector. Uh-oh, Steve's been putting in front paragraphs in. Let's see here. Um, uh-huh. I'll say these are what some very famous money managers are doing right now and what they're moving into. One is Teva Pharmaceuticals, Stanley Druckenmiller, who I like a lot. His fourth largest holding, Natera, a biotech, Coherent, and chipmaker Coherent and Woodward. Solutions for aerospace 2 and 3. And meanwhile, Duquesne established 4 new investments. This is interesting. American Airlines, that's a transport. Skechers, a consumer finance company, SLM. Interesting. NVIDIA 2 times long as NVDL. I'm not sure you necessarily need a ton of leverage on that one, but yeah. Steve gives the link to the article. Thank you for those inputs, Steve and Dean. And we'll scoot this aside and keep looking, but I like the VDE chart. I think it gives a more interesting and common sense perspective on large cap energy, and which is still quite low. It won't, in my opinion, it won't last in that low position. XLF. Oh, and that reminds me of another thing. So anyone who was short the market got their clocks cleaned a week ago, Wednesday, the Wednesday before last, when the stock market went up 3,000%. I think that's the reason the market has been moving sideways and sluggishly ever since then is because the shorts are too afraid to short. And this is something I was warning about even before that happened. The Wednesday before last. And I think that condition will persist. And I just think this, based on what we empirically saw that day, it's shorting is profoundly dangerous, and I think the shorts are probably too afraid to get back in there and short. And I think since stocks have kind of moved sideways since that, they're just sort of the market's trying to regain some degree of normalcy before it continues higher. So XLF I think XLF is giving us that same ending expanding diagonal, looking for a move up through September. I don't think there's enough up room here to call that a buy low, really. So I'm leaving the financials out of it, although uh, could easily be a nice, well-behaved sector to try to go in. And so I'm going to put buy low here in late April, early May, with a question mark for now. I'm not going to add it to the spreadsheet. Don't kind of grade that out. But if the rest of the market's going to move to the upside, I think financials will. And here's another important factor in the markets. This move to the downside is clearly a uh, a a three-wave structure into an 18-month cycle trough. This is bullish. So I don't even have to talk about tariffs, tweets, or anything else. This is bullish. Did I say bearish? This is bullish. Three waves down, pretty substantial percentage down into an 18-month cycle trough. That is bullish. And I can even see, so this is after a 20% correction in financials. I can kind of see a 1, 2, 3, 4, 5 wave up structure. Actually, 1, 2, 3, yeah. So I've looked for that pullback down through late April, early May. If you don't want to risk it, you want to just get long. The technicals are good here. You can see the money flow index versus RSI very deeply oversold and not only this low, but at this low. That's the darkest stripe we've seen on XLF for a long, long time. Darkest green stripe, which is generally quite bullish. And you can see the money flow, which is a volume weighted RSI, is rallying faster than the RSI itself out of that low. The rest of these, I'll just take a quick glance. So natural gas stocks, I'm not convinced these have bottomed yet. The reason is because I'm expecting a bottom in natural gas after a leading contracting diagonal in natural gas. I'm looking for an ABC correction down into early June. So this is natural gas down here. So I'm looking at this one as an add, but as a buy low, but probably not until June. VNQ real estate. Look at this thing. Look at the bounce on this baby. VNQ real estate. And this is up through March of 2026. XRT retail sector. Yeah, I do think that it bounces here and all the way through November, but only as a wave two. I'm not expecting any more new highs. So I'm not including that in the buy lows. IBB Biotech. I think we're just off of an important low in IBB Biotech and bullish through November of 2026. TAN, the solar ETF, I don't think bottoms until mid-year. I do think we're starting into a little bounce here, but it needs to complete from this high here, a 1, 2, 3, 4, 5 wave down structure. Just a quick look at consumer discretionary. I can see a 5 wave down structure here, very clear. 1, 2, 3, 4, 5. So that is likely to rebound back to the wave four of one lesser degree is all. Now, it might take several months for it to do that, but because of that clear 5 down, I'm not really that excited about consumer discretionary. Basic materials can also see a 1, 2, 3, and then a triangle, A, B, C, D, E, triangle for 4, thrust out of the triangle for 5. This looks like a completed 5-wave down item. And therefore, the rebound is likely to be an ABC, um, back only to the wave 4 of 1 lesser degree, so I'm not going to include that. I don't think the agricultural fund is done moving down into its 18-month cycle trough. I think that'll take us down probably into May. And then we get a rebound through most of the rest of the year, but only a corrective rebound. And then the home builders. I'm really tempted to include the home builders as a buy low candidate through September. However, I think this is probably a 5-wave down structure, and this is only just a wave 2, so it might only move up through the wave 4 of 1 lesser degree. I think that real estate is in a different. The VNQ chart has potentially a lot more upside than the home builders, based on the wave count. That up from the March of 2020 low, we got a 5-wave A, a 3-wave B, and this would be a 1-2-1-2 setup. Either that or a 1, and then a big expanded flat for wave 2. That probably should be the count now. Let me see here. Yep. Okay. So we'll put this would be W X Y. So I think we're getting a pretty solid kickoff out of that low, and it looks like the beginning of wave 3 on VNQ. Shippers. So shippers on a Baltic dry index. This has been on my buy low list for probably longer than anything since January, and that's a buy until Jan of 2026. BDRY. That's the Baltic dry index. So this is shippers, and I have 2 shipper stocks that I've included on the buy low list. One in by the way, BDRY. I would say it's time to buy it. I think it's putting in the finishing touches of wave 2 here about now. And so I got in here and got out here because of Hurst and was looking for a pullback for wave 2. And I think we've seen enough of a pullback, and the next move to the upside is a wave 3. If shipper's going to move up that much, I think we probably will get some kind of news that takes some of this stress off of this uh, tariff news that I think is causing a lot of people to sit on their hands. Once that news turns positive, this could turn to some of these could turn into a major rip to the upside. So ASC is another one, bullish through Feb of 2026. And that would simply just be looking for a fifth wave up, and this would be up from the October of 2020 low. One, two, three, expanded flat. Wave B was 1.382 times wave A, and wave C was exactly a 0.618 expansion off the bottom of wave A. Yeah, big dividend. Last time I checked, over 9% dividend on that stock. And the other shipper that I kind of picked out after looking a lot of them was SBLK, another big dividend stock, up through June of 2026. And this would be for a fifth wave up of a diagonal. One, two, three, ABC for four. The wave C moved down and stopped going down right in a Fibonacci target zone I had set where wave C would be either a 0.382 or 0.618 expansion off the bottom of A. So you measure this distance as a wave A, take that times 0.618, add that to the product to the bottom tick, and you get this line here, and you can see it bottoms right in there. SBLK dropped the first quarter payout a lot. And yeah, they do adjust. These shippers do adjust their payouts. And they probably just being conservative about what they can afford to drop out if, we're looking at tariffs kicking their butt. Be a smart thing for them to do. Dean, what percentage are they currently? Yeah. Did you notice dividend? Oh, look. 2.61. Still not bad. And I didn't choose these because of the dividend yield. It was just kind of shocking that they were paying that kind of dividend. I chose them because of the technicals and the need for a fifth wave up out of a large cycle trough, in this case, 4.5 year cycle trough due in April. So those two are on the buy low list still. Mining ETFs are next. So, can anyone guess what so the consensus trade before, like last year during most of the year was Mag 7. That was a consensus trade. Nvidia, Palantir, these bubble-ish stocks. But obviously that has lost its footing as the consensus trade. Can anyone tell me what the consensus trade has been lately? Gold. I wouldn't even say it's the gold miners. I would say it is flat, just gold. And because the miners are nowhere near, the miners charts don't look like the gold charts. They've been holding back. For instance, if I put a comparison signal on comparison on here, symbol of GC 3-057, and we'll make that gold looking. So it's really a whole different ball game. The move up, especially from this low in September of 2022 on gold, has been very one-way-ish. So yeah, it's clearly been gold, and you know what they say about consensus trades? They're consensus trades until they are not, and so the gold trade has become extremely crowded, and I don't think that's good news for gold at all. And I don't think now would be the time to buy gold or gold miners. It'd be quite opposite. I think I am tempted to short here. Really tempted to short with like dust. Um, but here's the I already showed you the chart on XAU. This is the gold and silver sector. And one, two, three. No, it can't be a one, two, three, four, five. No non-overlapping thing to the upside because it overlaps. So this would be an ABC, and this is, I think, three waves down for an A. And now we're getting three waves up for a B wave, and that B wave still the best target for a B wave on the XAU sector, where it would be 1.382 times the length of this three wave A. Still hasn't been hit yet. So I wouldn't call this an outrageous bubble looking thing. But I still think it counts best as a B wave on uh, this particular chart. And Hurst is bearish, not only down into September 2025 this year, as I think this consensus trade will unwind, uh, but it's also bearish after that for some period of time. So that's kind of an alternative way to look at GDX. So here's GDX, and no change on the wave count from last week. And we're getting a relatively large pullback now that left a weekly pin candle where there's this peak sticking way out into thin air. You can see that Hurst thinks that a 4.5 year cycle peak nest is due. I was suggesting last week that this could be an exhaustion gap, or maybe that could be an exhaustion. That if that was the exhaustion gap right here, that has already filled. If it was an exhaustion gap, then this move is exhausted. That's what the RSI versus money flow is suggesting. Is It's hard for you to see on this chart, but that final blast move up here had the RSI move up into its overbought territory on a daily chart above 70, and the money flow lagged it terribly. Trouble. I think there's trouble in paradise here, and that these are going to pull back, and we'll start seeing money peel off out of the gold consensus trade into and broaden out into a number of these other stocks. So not only would I um, say that this is not a buy low stock, I would say that this is the best current example of a sell high stock or ETF. That being said, I doubt because there's so many buying opportunities presenting themselves. I doubt I'll be rushing to short this personally, but I might put in small trade on it. There's so many signs of a top. Um, so anytime on the daily chart of my algo that we have the money, the RSI in its overbought territory above 70, and then it moves down out of its overbought territory. So it's moved down to 69.62. With the money flow riding below it, that throws up a pink stripe. So the last pink stripe we got here, and that was followed by a multi-week move to the downside. The opposite, when the opposite thing happens, that's a bullish sign. But this is not bullish. This is bearish. It's a bearish sign right now in GDX. Isn't it interesting that depending on what you're looking at, for instance, this is the trend, basically the trend following template. There's nothing showing on this template that suggests that we're at a major top. This is why it's important to look at multiple indicators. And in this case, the money flow versus RSI is giving a really important, as in essence, sell signal from a deep, deep overbought condition. Let's see what else we have. Silver miners. So there was a big deal recently about how silver was breaking out, moving higher. Well, it turned out to be a false breakout. I think it was a false breakout on the silver miners and on silver itself. Hurst is bearish from a 40-week cycle peak down into the next 18-month cycle trough due in October of this year. So I think we're going to see a risk-on environment between now and late in the year, and I think you'll see a tremendous amount of money flowing out of what have been viewed as safe haven items like gold and silver and into risk-on more, stock market items. Copper miners. I think there's a 4.5 year cycle trough due. We could be seeing this same thing on copper miners, which have tends to move more with the economy. They're not really considered risk on, or they're more risk on. They're not considered safe havens like gold and silver are. And this is bullish to complete an ending contracting diagonal into next year. Is this a buy low candidate? Mm, maybe. I don't think I'm going to include it yet. But it could be considered that. I just think there's going to be a lot better choices. ASA is a stock ticker that's been around for many decades. This is a company that uh, invests in precious metals stocks. So it's a bunch of stock pickers in the precious metal space. And so I'm still think that this qualifies easily as a B wave, and it's bearish from this deep, deep overbought condition. If we were going to look once again on ASA, we can see that the RSI is above the money flow. On RSI is in its overbought territory. That puts up a dark red stripe. Last time we got that, we got a significant pullback. We're getting it again. That's trouble. So I think this consensus trade of gold and the gold miners is going to fall apart. It's just become way too much the consensus trade. It's too widely believed in. AEM is another stock that I have a wave count that's bearish on, and this has been probably the most bullish large cap gold stock, gold miner. From this low here, so this is 3 waves down for A, B, C. This is a 5-wave structure, 1, 2, 3, 4, and then 1, 2, 3, 4, 5. It's hit all three Fibonacci targets I have for the top of the black, blue B and pink C, right in there. And it has backed off some from that already. So I just say super toppy. And PAAS, a silver stock, one of the largest on the U.S. exchanges, fell well short of its all-time high or most recent uh, year's highs that occurred back in 2021. Fell well short of it. This is one that I think counted nicely as a 1, 2, 3, 4, 5-wave structure, followed by an ABC. It's not bullish. Okay. And Hui, I think I didn't update him. I take the asterisk off of that. Okay. Moving on to stock markets around the globe. Start with the German DAX. German DAX, I think, is bouncing out of a large cycle trough, and the trough, in this case, it's 40-week, and we still need a 5-wave up structure. I'm bullish on the German DAX until July of 2026. And that's how we would end up with a 1 up from the 2020 low. 1, 2, 3, 4, 5-wave structure. The best Fibonacci target for the end of the fifth wave is up at 25,530. That hasn't been hit yet. So this is a big enough move up off of this low. We're probably going to see wave one be the longest of this final 5-wave structure to the upside, and therefore an ending contracting diagonal. The FTSE, beautiful bounce. This is very likely the 18-month cycle trough. And looking for basically an ABC corrective pattern. I'm calling the top is in on the FTSE, but I think we'll be moving generally to the upside through the end of this year. Hang Seng. I think the Hang Seng has put together an A, and this is off of this capitulation low back in November 2022, an impulsive a deep wave B, and then we're going to get a 5-wave structure to the upside. It started with a 5. I've got this as a leading, expanding diagonal. Leading diagonals are typically deeply retraced. So I'm generally looking for the wave 2 to last through the rest of this year on the Hang Seng. And then I think as we move into next year, we could see a situation where we get a rotation out of the US and into the Asian stocks. But I don't think that comes until late in the year. You can see how violently the Hang Seng moved to the downside recently. Now I think it's going to put together a B wave to the upside into September. The next move to the upside probably up into mid May. EEM, I revised my count last week. It's more bullish. EEM includes a lot more than just China. It's got Taiwan, South Korea, India, Brazil, South Africa. And so virtually all these countries, the punitive tariffs have already come off for them. China's the only one left, to my knowledge. And so this is a pretty bullish looking chart, potentially a buy low chart until February of next year. Matter of fact, I think I'm going to put buy low. So this would be one way to uh, potentially uh, diversify around the globe. So EEM, I don't know. Okay, I need to. Okay, these last two dates I put on there, I don't know what those were, so I'll have to figure that out later. EEM is bullish through out of an 18-month cycle trough due in mid-April. It's bullish through February of 2026. I'll fix these fonts later. Nikkei looking to the upside into July. Shanghai Composite looking for more correction down into the third quarter of this year. Canadian stock market. I think oil's moving higher, and so I think the Canadian stock market is a buy low candidate. Okay, Aptos narrow. So this would be the TSX, and that is bullish through May of 2026. This most recent low on TSX probably is the 18-month cycle trough, even though it wasn't due until May. This looks like a clean, clear three-wave structure to the downside. It's very likely bottomed. And now we're getting a wave one, looking for a bit of a wave two pullback to get back in there. ASX also, the capitulation band down into that most recent low was very low, even though the 18-month cycle trough was due in May. Probably the low is in. We've got a huge pop off that low. I would include now ASX. I'm adding that to the spreadsheet as well. And bullish through May of 2026. And before I move on to um, commodities, which is next, I'm just going to, so my spreadsheet is complete. I'm going to go back to the shippers real quick, and I'm going to get the updates of how long this rally is supposed to last dates off of those two shippers, ASC and SBL. SBLK is up through June 2026. And ASC is up through Feb of 2026. So there's a quick look at the spreadsheet so far. And I will try to add some additional, like, I know the three times transports is TPOR. And so we'll add some more ticker symbols to that before we put it in the um, add it to the screenshots after after the fact here. Okay, now moving to, actually, I think bonds is next. Bonds, yes. So bonds has been very sluggish to move up off of this recent low. Trump apparently is trying to threaten the Fed into lowering rates. Um, Before we get to regular bonds, though, well, look at HYG junk bonds. Here's another buy low. An 18-month cycle trough was due in May, and almost certainly happened here. And so I think HYG junk bonds is a buy low candidate until May of 2026. LQD, this is investment grade corporate bonds. This is a buy low until April of 2026. That's high grade investment grade corporate bonds. So I think interest rates are going to be coming down. Still bullish on TLT. It's been very sluggish to get going to the upside. But on TLT, I think it's a buy low. Why would TLT go up at the same time as the US dollar, which would go up at the same time as virtually everything in the stock market and commodities? And I just think that it would be um, a renewed confidence. Yeah, I don't know, Jacob. Let me see if I can get you. It's probably, if I took a guess, it would be somewhere late April, early May. And I don't think that I necessarily got a really good read on that out of the composite line. Um, so I'm going to close the Dow Jones Industrial Average and open at US pound, all data, Hurst nominal model, peaks and troughs, no repins. So, but the cool thing about this data set is it goes back prior to 1980. So there's the 1981. That's when interest rates were in the high teens. And Paul Volcker was the Fed chair. And you can see that uptrend lasted for decades and decades, but the uptrend recently broken to the downside into something that looks like a 1, 2, 3, 4, 5. So I think this is the beginning of an upside correction. And that's a long data set, and that one's going to have to sit there and think for a minute. So I'll try to get you a date on this on TLT here shortly. But TLT also is a buy low candidate, and that is through, yeah, I'll put January of 2026 for now. Actually, that should say Feb of 2027. So the analysis is still thinking, so I'll cover a couple more things. I'll always look at sentiment on bonds, and the sentiment on the longer dated bonds. Oh wow. So we have commercials that have become on a 12-month look back heavily long on the 30-year. We were recently as low as a 10 down here. So this was a critical thing that needed to happen in order to get bullish on bonds. So that is a bullish development on the weekly chart of sentiment on the 30-year. How about the daily? Yeah, commercials all heavily long. How about the 10-year? 10 years, yeah, commercials heavily long now. Retail at a 61. Recently, uh, pretty pretty much a perfect storm bullishness here. We recently had the commercials heavily long, got down to a 10 DSI. But after this recent pullback, I just think that's a buying opportunity on bonds. Let's look at the daily chart. Yeah, commercials heavily long, all three measures. Commercials are in position for a rally in bonds on both the 30-year and the 10-year. Let's take a look at the 2-year. Not as clean and clear there. Then finally on bonds, before we get back and get a little bit more detail on the TLT daily chart. German Bund has been rallying very nicely out of that low. There's very likely an 18-month cycle trough, and notice up through April 23, down through May 16. So this could be a clue, and I would say if you are positioning yourself against long on bonds, you'll want to pay attention to the dates on the German Bund. There seems to be a correlation there. And the German Bund is bullish out of this 18-month cycle trough until March of 2026. So we're going to go back to the daily on TLT. We're going to go to this long-term and look what the composite line and how bullish the composite line is on this long-term chart on bonds, but it doesn't really start taking off the upside until December of 2027. It's worth considering. That, maybe bonds are just going to be dancing sideways here. Maybe they're not worth messing with. There's a lot of other items that look a lot better. But the composite line here is saying get in there by 419. Well, that's today. And be long until at least June 24. And you see this nest up here? That's what this peak right here is about. July 15. So I think this needs to be revised to July 15. And this the date is that the composite line gets going to the upside is April 19. And I'm going to check another couple of dates on here. That May 15 and June 15, I'm going to look at those. May 16, June 6. So that's what I mean is from day to day, you get these very subtle changes on these dates that Hurst suggests because it's constantly adjusting to ongoing price action, which I think is fantastic. I like it. And July 15. So there you go, Jacob. No, it hasn't gone much of anywhere quite yet, but it's really, I think that um, this was an 18-month, this is a 40-day, this is an 80-day cycle trough, the first 80-day cycle trough after an 18-month. This should turn bullish. And the way I look at it, I'm bullish on a lot of things. This one might act somewhat as uh, a hedge against being too wrong. And I'm going to make that through mid-July on this spreadsheet for now, because that's a large cycle trough. I'm sorry, a large cycle peak nest in mid-July. So there's bonds. Now to commodities. And we'll start with a couple of interesting charts. This is the commodities price. I already showed this one earlier in the webinar. Uh, but suffice it to say that commodities, in comparison with the general stock market valuation, recently in December 2024, were about as low, about as cheap when compared to the stock market as they ever have been in history. This is crude oil when priced in gold, and it looks to me like we're getting, um, I think this is a capitulation sort of low in crude oil when priced in gold. And I think we're going to see this whole consensus trade on gold reverse. It'll move into energy, and oil will be the beneficiary. This is the weekly chart of crude oil. Notice that a large cycle trough, Hurst thinks that it occurred back here, and we have one more low below it. I think Hurst will eventually adjust and call this most recent low um, a large cycle trough. Oh, it looks like it has. It looks like it has. I just haven't updated the this chart yet. We'll just put the large cycle troughs on here. So it's got that capitulation low back here is a 4.5 year. That's in April of 2020. And it's now, and I think this is correct, calling this most recent low a 9 year. and it expects upward movement until September of 2026. Actually, it's changed to July now. July of 2026. Back in '08, it was July was the blow off top month in crude oil back then. So this means bullish on crude oil from approximately now until approximately July of 2026. So crude oil, CL is bullish through July 2026. So I've added that to my spreadsheet. It's getting pretty long. Here, crude oil, so CL contract. There's ways to play crude oil in the ETF market. One is it OCO? Is that right? 2X Bull or UCO? What is it? UCO, yeah. And I think is that two times, Dean, or three? Do you remember? Yeah. UCO ticker. Two times is correct. So there's an ETF way to play that. It's on the buy low list. And now on this one, no, that can't be right. Better bring up Hurst on this. This is at QM pound. At QM pound starting August 2005. No repins. And let's see how fast it can do this. Yeah, pretty fast. And this considers peaks and troughs. Okay, and this is what I'm talking about is that out of a large cycle trough, this would be an 18-month. The composite line is so bullish out of those lows. It's the next pullback is through May 23rd. It's projecting up through May 11. So on this daily chart, and I also want to take this opportunity to look at this. 4.5. and a 4.5 year. That'd be a 9 year. And that low was where? Right there. Okay. Yeah. So in point of fact, I need to correct something. This we would be an 18 month. Either way, it's bullish. And for some weird reason, 40 week on 6.5. Yeah. Yeah, this is correct here now. We'll just leave it like that for now. And the next 18-month cycle trough is after it takes off big to the upside, and that's going to be in October 2026. So this is very likely the 18-month. I'm going to take off these other designators real quick because it looks to me like Hurst has changed its mind a little bit recently, and this nest is moving down into right here. So the center of the nest is 418. So that low that we just saw, I think, is a large cycle trough nest. And I'm going to just figure that the move we're seeing up now, so that'd be an 18 months just prior to that. Yeah. The move we would see up next through approximately May of 2026 would be into a 4.5 year. Is that right? So there's the nest. It might have a possible 9 year. Anyway, it's bullish. It's just flat bullish until April of 2026. So I'm going to take off some of this other junk because it's morphed. You saw how bullish it is. It's very, very bullish. Is they all count for crude oil in the red wave B as a 9 year cycle peak now the main count? No, it's still the alternate, but I wouldn't be surprised if that turns into the main, Ryan. So July of 2026. So I'll work on this a little bit more, but July of 2026, yeah, a 9 year cycle peak nest. So there's the 4.5 year, there's the first 18 month, second 18 month, then this will be a 9 year nest. So that is quite bullish until July. And we'll go back to the spreadsheet and add Crude oil, I already did. Up through July of 2026 is correct. But yeah, that could be the main count, and I wouldn't be surprised if I go with that at some point. At this point, you know what? It doesn't really matter much, in my opinion. We're just, from Hurst's perspective, it's bullish until July of 2026. Might make a new all-time high at that time, maybe not. I'll worry about that in later webinars. So, the question in my mind is this pullback, are we already done with the one and the two? Well, Hurst thinks that we are done with that pullback, but I can't help think that that wasn't enough of a pullback for wave two. Yeah, I'm going to go like this. Then we might get a little bit more sideways and down into late April. But anyway, this was a buy low candidate. And this claims that the next 20-week cycle peak is due, that'd be this one, right here. Here's the nest. 629 would be the nest. So hopefully I've got something pretty similar to that. Yeah, I do. Composite line is suggesting 617, and that's, yeah. So at the very minimum, up through 617. I don't know, the way I would handle this kind of looks like an A, B, C expanded flat or running flat underway. I'd just be real careful of that. I'm not sure I'd go in with all of the gusto off the bat, but if it keeps going up aggressively, then we could have had just a very brief wave two, a one and a two, and then it's just going to keep going. So there's crude oil. How about nat gas? Nat gas, the roadmap's a bit different, and we got a leading contracting diagonal finished, and that's up from the February of 2024 low through March of 2025. Now we've got a pretty substantial pullback already, but I think it was in five waves. One, two, three, four, five. Um, should be bottoming about now, get a bounce through early May, and we won't see the end of an ABC pullback until mid-June. At that point, I think net gas would be a buy low. It's almost all the way back to the wave four, one lesser degree already. And this could be a three-wave structure to the downside: A, B, C, X, or let me think here. A, B, C, X, A, B, C. Yeah, it's as always, it's a very difficult wave count on natural gas, and then so Hurst is suggesting we're going to get a bounce next for 2 or 3 weeks, probably back to the wave four of one lesser degree. Eventually, it will become a buy low candidate, in my opinion. Let's check sentiment on that gas. We had a perfect storm of bearishness back in late February, and that has panned out where the commercials were heavily short, retail heavily long. Now all of a sudden, we've got two things going for us on a bounce, a multi-week bounce on nat gas. One is seasonality. We've got bullish seasonality through really all the way through mid-May. Also, we have commercials that on the short term are expecting a bounce, positioning for a bounce. The DSI has gotten down all the way to a 16. So that's really close to where you would see a bounce typically, but we don't have the 6-month look back and the 12-month look back commercials in position for a sustained bounce. But still, I think we get a bounce. So back to the main count, I'm looking for a bounce back to the extreme of wave 4 by the time we get to May 4. I think that'll happen. Now moving to industrial metals. Industrial metals offering up a number of buy low candidates here recently. That none of them are gold and silver or copper because none of those are low. We'll take a look at copper. My main count on copper is that it turned and moved to the downside. I'm not sure how confident I am in this roadmap, this real bearish roadmap in copper. And the reason is because commercials on a 12-month look back are heavily long. We got oversold and we got a reversal candle and we got a pullback. But commercials are unwavering on this thing. They are staying heavily long. So this is not a good shorting opportunity for copper. Notice that commercials on 2 of the 3 majors are heavily long copper out, and we got a DSI at 22. So the commercials as a percent of open interest, we're predicting this bounce, and we've got the bounce. But still, I don't have a real strong feel for what's going to happen next on copper. I don't know. My roadmap is probably too bearish. Looking a little toppy on the gold to platinum ratio recently. I'm looking for the gold to platinum ratio to move down in a fourth wave, down through mid-October. And the reason is I'm expecting a rally on platinum itself through actually late October. The question is, do we have a bottom on platinum? So on this weekly chart, you'll know, and I have updated this one this week. I would love to get long this item for a nice multi-month bounce out of a buy low situation, but I'm not convinced the bottom tick is in yet. So it's fairly complex wave count. A, B, C for W, and then A, B, C for X, then an A, expanded flat for B, and all of this is expected to be a wave C that's been very sluggish to take off to the upside. So 1, and then I'm looking for the end of a wave 2. So the question is that the bottom for wave 2 or not? And I'm still not sure. This looks like a W and an X, then a 5-wave A, triangle for B. So this down movement would theoretically need to be a 5. So um, from this low right here, 1 in pink, and then a 3-wave W, a 3-wave wave X, and then an A in 5 waves, a triangle for B. So A of the triangle, B, C, DE. That needs to be drawn like that. And the end of the triangle here, and then 1, 2, 3, 4. I can still see and wave 4 has moved up into the price territory of wave 1, but this still could be an ending expanding diagonal. 1, 2, a long wave 3, a 4, and then a capitulation wave 5 to the downside. So where would I be wrong? Where would I be wrong? And in any movement above that level right there, any movement above this line means the bottom is in, already in. Eh, Any movement above 1036.30 means the bottom is likely in. There'll be a movement above these highs right here. As you can see, I think that the upward movement from there's lots of upward movement from there. So yeah, you wouldn't be getting in at the bottom tick if you waited for that confirmation. But it seems at this juncture that um, it's still possible. So, however, I'm going to add platinum to the buy low list. And it's go up through, I'm going to put November 2025. Just not willing to call it yet. I don't see enough of the proper subdivisions. I mean, this certainly is a nice move off this low. An 18-month cycle trough, you can see is due in May. How about sentiment? Commercials are back on the 12-month look back, heavily long. That's bullish. We have a perfect storm of bullishness really on the platinum because the DSI got all the way down to 17 here. So that's a good sign, a bullish sign on platinum. And I suppose it's possible that this was an important low, and I'm just being way too picky about it, expecting a 1, 2, 3, 4, 5 structure down through late in the month. Commercials are they're in there. They're in there long. So we had I would say a perfect storm bullishness, or very close enough, on April 9. April 9, 2025. Bullish. PLZ. I don't, I don't know. I don't know if there's anything I can add here to what I've already said. Um, Palladium. Palladium also gapped up. However, it hasn't moved up high enough for this to be a completed ending expanding diagonal yet. Here's what I mean. Okay, from this five-wave up structure, the top back way back here in October 2024, the 1, 2, 3, 4, 5. Then we've got an A, then an expanded flat for B, and then one of a diagonal, 2, 3, 4. Now, that probably was long enough to be a fifth wave of the diagonal, and we could be into the new trend to the upside. However, in a megaphone pattern, the wave 5 of the diagonal can subdivide as an A, B, C. And so I'm not convinced until it breaks above the high in late March. I'm not convinced that the low is in. Still, palladium is a buy low candidate. And it's bullish through July 2026. Now, I was only showing the 2 times and the 3 times bull here. What I probably ought to do is the non-leveraged ETF could be on palladium is easy. Um, it's PALL. On platinum, I think it's PLT something. Um, PPLT. Yeah. Okay. What's the 3 times bullish TLT, Jacob? Seems like it has a Z in it. What's the 3 times bullish TLT? TMF, that's it. That's stupid. Oh man. Oh no. T TMF. Is that right or is it TMZ? TMZ, yeah. Okay. It's a 3 times negative. Okay. Um, okay. Good enough for now. I took a look at SPPP, which is the Physical Platinum and Palladium Trust, and it really hasn't taken off yet, which is pretty interesting. Really hasn't taken off yet to the upside. And the Hurst thinks that it's going to stay down until mid-June. I also did new Hurst on SBSW, and the Hurst on SBSW's composite line is bearish from April 22 through May 23. That being said, I'm adding SBSW to my buy low category and then looking to the upside through October 2027. So as you can see, on some of these, I'm not absolutely positive that they have put in, well, I think SBSW actually has put in its bottom tick, back here, an 18-month. So yeah, it qualifies as a buy low for sure. Um, Palladium, the next large cycle trough is due, and we have some Fibonacci targets, 832. And it's supposed to bottom in May, first half of May, but I'm still adding it to the buy low list. And on platinum, the 18-month cycle trough isn't due until the first half of May. But I'm still that up rip is big enough now that might have been the bottom. So I want to make sure that I've got this categorized as a buy low. REMX. Notice Hurst thinks it doesn't bottom until the first sometime in the first half of May. But as far as I'm concerned, I can see the proper subdivisions as likely in place. So here's another buy low, REMX. And Hurst is saying up through September 2026. I have not taken a new look at MP materials yet. The last time I did it, which is a few weeks ago, Hurst was saying that it should bottom in late May. ALB is a large lithium miner, and I think it qualifies as a buy low. ALB. And looking at up through September of 2027. And so this would be Aptos Narrow 14. Okay. So there's that one. Okay. Another buy low item, uranium. Yes, I think the majority of our EMX, that's a good point, Steve, are lithium. That's one of the reasons I took a look at that large lithium stock to see if there was some agreement. But yeah, lithium, I don't, it'd be nice if there were another way to play some of the more exotic metals. But anyway, URA, uranium, is on the buy low list, and the expectation is that it will move up through May of 2026. And it's already had a nice bounce out of this low. I'm not including CCJ, but CCJ is bullish up through late September. Matter of fact, on your URA, because CCJ is such a large chunk of URA, I'm going to put that up through mid-September of this year. Um, mid-September 2025. Okay. So there's the industrial metals, precious metals. So gold especially has recently become an incredibly crowded trade, long gold. This usually doesn't end well. Um, Here's the gold silver ratio. It looks a little starting to look a little toppy, looking for a bit of a pullback for a wave four and still need a wave five to the upside. So I don't think gold's dominance over silver is necessarily over yet. Um, but on the short term, looking for a pullback from deep, deep overbought territory, looking for the end of this wave three. It's possible that gold will move much higher in a bubble move. That probably would be while after this current stock market move to the upside that I'm expecting through late this year, early next year in many items, that we would see a return to gold as a flight to safety as it's possible. If you look at my long-term charts on Dow Jones Industrial Average and S&P, they're quite bearish after this fifth wave up of this diagonal completes. So I don't, I'm not saying gold is at as high as it'll ever go. Not at all. My long-term chart is setting a Fibonacci target up there that's unbelievably high. It's $8,000 a share, 7,000 or an ounce, 79.42. And but before that happens, I think we need a wave four pullback. This wave three has become extremely, extremely stretched, and like I say, the trade is extremely crowded at this point. Um, but anyway, from this low 40-week cycle trough back in mid-November in gold, 1, 2, 3, 4, and then the final five wave F structure, 1, 2, 3, 4, 5. And no, the gold did not overlap into one there. This would be the wave five of five to end blue wave three, and a Fibonacci target was just reached here the last couple days of last week, and that is where pink wave five. So you started this low, this 40-week cycle trough low in October 2023. You got a pink one, pink two, and then a 1, 2, 3, 4, 5 for pink three. So you take that entire distance of 1 through 3, take it times 0.618 and add that product to the bottom of wave four, and you get this target here. It's the best target for the end of five waves structure that we have in Elliott in the Fibonacci / Elliott wave world. Um, so initially looking for this pullback down into late August. It's done everything it needs to do. It overshot a normal where blue wave three would be a 1.618 expansion of wave one. So that target took this distance from the October 2022 low up to through this high. Took that times 1.618 and add, instead of measuring up from the bottom of wave two, it added that amount to that top tick there, and it came up with that target. So that target for the wave three has been bested. And now on Thursday of last week, gold reached the best target for the pink or minute degree wave. You can see This most recent move up in gold, the RSI moved up above 70 and the money flow is lagging it. That's what we look for with this money flow versus RSI as a clue on all all charts, monthly, weekly, daily. And the money flow is lagging on this last move up, suggesting that this could be the end of the upside trend for now. There you can see it again on the daily algo chart, the lagging volume. This last time we had just a very small, quick incident, similar condition was here, but notice it's a much more prolonged, several days worth um, dark stripe on this daily chart. We had some warnings going into this peak back in October of 2024 that called for a pullback. So, I know it's been, anytime you have what I would call a consensus or bubble move, it's extremely difficult to call a top on it. And then Hurst has been ready for a top for a while. I have been too. So I've been wrong about how far this thing would stretch, but I still think that there's no way a person should buy it here. If anything, they should short it. Notice 12-month look back commercials all of a sudden heavily long. Who knows? Maybe they're going to stay long until they see the end of this tariff, uh, the intensity around this tariff situation. I don't know. And commercials are all heavily long, all three majors, and so is retail. Everybody's long gold. Everybody is long gold. Commercials and retail alike. It's a consensus trade. It's super crowded. Silver. Silver, on the other hand, is still fair amount below its 2011 high. So gold is way, way new highs. And whereas silver has fallen short of it, and silver is more of an industrial metal, really. But I think it's been moving to the upside in relation to gold, or in sympathy with gold. It is the little brother of the safe haven gold. Brian says central banks are still buying gold, and of course they are. Um, they're scared shitless. So, uh, does this make a really great idea for a short? No. No, as long as the central banks are doing that, there's plenty of other things to do, as I mentioned earlier, than short gold or silver here. I'm making a list of them, and it is a long list. Silver, I think probably isn't hasn't finished a five-wave down structure yet. I'll represent to you that silver, the composite line on silver, is bearish. It is bearish from this 4.5-year cycle peak right here, all the way through June of 2027. So you're not going to find me talking about, oh, you should buy gold or you should buy silver anytime soon. Not at no point during the next year, certainly, or for the rest of this year. But the interest that has been pulled into gold and silver has left a lot of other items for dead. And those are the buy low items that I've been pointing out: palladium, platinum, rare earths. How about sentiment on silver? We had a perfect storm of bearishness 2 weeks ago. That was followed by that collapse. Now we're seeing some upward movement here, and we're seeing the commercials all of a sudden want to get long again on silver. I just don't think it's going to work out. Hurst is bearish down into May through June 16. If you saw the composite line on silver, it would shock you how deathly bearish it is for the next 2 years. 2 years. Now moving to currencies. I don't have much new to show you on currencies, but I do on Bitcoin. And believe it or not, Bitcoin is now it's going to let the cat out of the bag. It's going to make my buy low list this week. Yeah, Bitcoin. So we'll look at that in a second. But U.S. dollar index certainly looks like we started into a wave 3 or wave C to the downside on the U.S. dollar index, and Hurst is bearish on the U.S. dollar all the way through the end of this decade. I'm looking for the completion of an ending contracting diagonal that started in 1985. That being said, I think the next thing we're going to get is a bounce in the U.S. dollar. It very well could be that if we get this bounce in the U.S. dollar through the end of May, that would give us the pullback we need that I was suggesting might still be in front of us on palladium and platinum. So this looks like a nice, clean, clear 5-wave down structure now. So I would expect a bounce next back to up to the wave 4 of one lesser degree. Hurst thinks that that bounce is going to be up out of a 20-week cycle trough up through late May. So all the way back to approximately the wave 4 of one lesser degree, back into a normal wave 2 Fibonacci target somewhere between, 50 to 61.8% retrace back around the wave 4s. So I'm counting this as a 1, 2, 1, 2, 3, 4, 3, 4, 5 complete. We're deeply oversold, looking for a multi-week bounce next. And I predicted that last week, and we did not get any new lows. It kind of just sat there and didn't do much. On the sentiment on the U.S. dollar, we are nearing a bullish spread. Notice commercials on 12-month look back heavily long, retail only to 36. I normally would look for a lower DSI number than 36 in order to pronounce that we are nearing a bullish spread. But I'm not looking for a move back to new all-time highs. I'm looking for a move back to the wave 4 of one lesser degree through late May. So that's all of the pullback I'm looking at on the U.S. dollar out of this low. So I think we're close enough to a bullish spread. We're also deeply oversold. The money flow versus RSI is throwing up a dark green stripe. Same dark green stripe it threw up right here before we got a very substantial move to the upside in the U.S. dollar. USD JPY, 4.5-year cycle trough due soon, and I'm looking for the US dollar to rebound through the rest of this year against the Japanese yen. Commercial heavily short the Japanese yen. Retail is on the long side. So that would be bearish the Japanese yen. And if the commercials are positioned bearishly for the Japanese yen, they would be looking for a bounce in the USD JPY currency pair. Canadian dollar's been moving, or the US dollar's been moving lower against the Canadian dollar. And then I think that trend continues. Remember that when this pair's moving down, the US dollar is weakening against the Canadian dollar. So if, as you know, I'm bullish on crude oil. And so that should be bearish for this currency pair. Continued bearishness. And then let's see here. Australian dollar. Australian dollar got a really nice bounce. Look at that. Wow. So this looks like a thrust out of a triangle. And now we got the thrust out of the triangle has completely retraced just as fast as the thrust out of the triangle happened. It's amazing how often you see something like this. Um, it obviously, I don't think can continue to the upside with that strongly. I would look for a partial pullback here before looking for more upside on the Australian dollar um, versus the US dollar. Weekly sentiment, bullish. We have commercials heavily long. Retail traders recently only 16 or 17% bullish. Perfect storm. And now we're starting to see the result of that perfect storm of bullishness that on the daily chart came in on April 9. Euro, Euro's been very strong recently, but I think we see a completed five-wave structure to the upside on the euro, looking for a pullback on the euro through May, in late May. So this pullback we would see on the euro and that strengthening of the dollar, like I say, that could give us one more leg down on platinum and palladium for a buying opportunity in May. Deeply overbought currently. Looks like a 1, 2, 3, 4, 5 wave structure. This last move to the upside, 1, 2, 3, 4, 5, kind of a blow off move. Looking for a move back to the wave for one lesser degree over the next several weeks still on the euro. Um, all of a sudden, on the euro, we have a perfect storm of bearishness. The next red candle will give us, I'll be putting one of these dates in black up here, and it'll be bearish. A perfect storm of bearishness on the euro, where commercials are heavily short. They're as short as they have been at any point in the last 12 months. And retail recently as high as an 82. The money flow versus RSI giving us a dark red stripe. When's the last time we got a dark red stripe on the euro? That'd be at this top and this top. This is back in 2018 before a new massive multi-year move to the, or multi-quarter at least, move to the downside. So that's how overbought the euro is currently. And I don't think it can keep going up without pulling back next. And then looking for that pullback down into late May, So that'd be about right there, back to the wave 4 of 1 lesser degree, enough to ease off these conditions before it can move higher. And then pound dollar, looking for a pullback on the pound dollar neck pair. This looks like potentially a 5 wave up impulse structure, looking for a pullback down in not only to late May, but on into early June on the pound dollar. The weekly sentiment there, we had a perfect storm of bullishness back here, and that has paid off. But the retail traders have gone from 16 all the way to 77% bullish. So they've gotten pretty darn bullish very, very quickly on that one, probably too quick and needs a pullback. Swiss franc, so on the Swiss franc, generally quite bearish the US dollar over the next several years into late in this decade on the US dollar against the Swiss franc. As we move in a little closer, the end of cycle degree wave 4 and a 9-year cycle peak back here in October 2022, followed by 5 waves down. And now it's been chopping sideways, ABC for the wave 2, then another impulse for 5 waves down, then a deep wave 2. And I think what we're likely getting, because there's an 18-month cycle trough due in early July, is a leading contracting diagonal down to the downside. So a lot of people would say, okay, well, this is wave 3 of 3 to the downside. It's just going to keep going down. It won't be able to buy a rally. No, it's just going to be so incredibly bearish and moving down. However, Hurst thinks that this is a 20-week cycle trough, and we're going to get a bounce up until early June. So this would be a leading contracting diagonal that won't finish until July, and then a pull back up and through February of 2026. So that means really more sideways junk, and the wave 3 of 3 to the downside really doesn't get going until February of 2026. Might have kind of nursed the. We also got a nice blast off of the recent low on the New Zealand Kiwi. Seemed to be blasting, starting a blast to the downside on the US dollar against the Mexican peso. USD, Chinese yuan looks like it's going to try to finish. Boy, for a long time, I thought this was the end of the B wave here, but it's still moving up. So the trade war and the uncertainty around the trade war has become more bullish on the dollar against Chinese yuan. That should finish up this structure to the upside fairly shortly, though. And then the South African rand actually made new high. Did it? I think it did. No, kind of a double top. It might have made it ever by ever so slight amount. But I'm still wanting to call this a 1 and a 2 and moving on down. And here's the important part, and I hope this was worth you hanging out here on this holiday weekend for this my take on new take on Bitcoin. So Bitcoin has been pulling back fairly substantially recently. But Hurst recently decided that this low here was probably a 4.5-year cycle trough, and that this low that we just saw was likely a 40-week cycle trough. And so the roadmap on Bitcoin, which should theoretically be pretty similar to the U.S. stock market, is bullish up through November next. And so that matches my roadmaps on the stock market pretty well. It matches the roadmap I'm seeing on the VIX, where we see the VIX coming down from a peak recently all the way into November. This is risk on. And so on the Bitcoin daily chart, I think we'll get a little pullback here. And so here's a date that I think you can put on your calendars that I think Bitcoin's, according to the composite line, going to pull back through April 25. And then I think we're in a risk on environment for a couple of months out of that low. So I am going to add, believe it or not, Bitcoin to my buy low list, and generally going to look for it to generally move up, although correctively, into November of 2025. And you guys just thought I was a permanent Bitcoin hater, which I kind of am. Um, so yeah, there's some ETFs here. Well, you know what? I'm not sure you want to play the Bitcoin using the miners. Not so sure about that. And I'll show you some miners here in a second. But yeah, these BITX is the 2X, BITX, the 2X bull ETF on Bitcoin. There's not very many leveraged ETFs on cryptos so far. Um, so we've gotten a 32% pullback on Bitcoin. So obviously very substantial. So I think it's worth a shot. And I've been fighting with this wave count on the wave down, but the fact that Hurst all of a sudden was deciding, you know what, this was the 44.5 year, this must be the 40 week right here. I decided to kind of squint a little bit and just put the labels where they made the most sense. And I think this was likely an enormous triangle here, A, B, C, D, E. This was a thrust out of the triangle. Now it looks like we've got a clean, clear 5-wave up structure out of that low. So I'd look for an ABC pullback. ABC pullback. And then I think there's a buy low opportunity on Bitcoin. The problem with Bitcoin until it topped was that it was a consensus trade, and it was continuing higher against any number of potential uh, technicals. But now that we have a lot of the bull crap out of the way, and it's no longer considered a consensus trade, can we look at these in a more normal way, in my opinion? So that's on the buy low list. And then Ethereum, so watch out on this. Ethereum, Hurst doesn't think it bottoms until mid-May. Mid-May, a May 18 nest. And it doesn't look like Ethereum has finished a completed 5-wave down structure yet. 1, 2, 1, 2, 3, 4, 3, 4, 5. So I think it needs a 4 and a 5. And Ethereum is down 66% so far. So, you know, Ethereum and Bitcoin are acting a bit different. Ethereum has been more aggressive and one wayish to the downside, but, at some point, I think Ethereum in mid-May may become a buy low candidate all the way through May of 2026 if the Hurst doesn't change. Um, Here's my point about the miners. Mara is a mining the stock that I keep, a Bitcoin mining stock that I keep a chart on. And on these Bitcoin miners, I think that cryptos are way too high for them to make a profit. It just sucks way too much energy, and it's just very difficult for them to make a profit. I don't agree with the idea of buying into any miners. And this roadmap, which is fresh Hurst on it, it suggests, yeah, we're probably going to get a bounce here after a 5-wave down structure, but this bounce is probably only going to take us into late May before it continues lower. The Hurst on a Coinbase is even worse. It's expecting more downside continuation, and I don't think Coinbase has finished a 5-wave down structure. And MicroStrategy, the grand poobah of Bitcoin manipulators, looking for upward price action there, but only through May 12 and then lower. So really, if I were going to try getting long Bitcoin in late April, I would certainly do it with a small position. I doubt that you would need leverage in order to participate. Uh, these micro uh, futures contracts are teeny tiny, especially Ethereum. One last announcement that I would like to make before signing off. Hope everyone has a happy holiday weekend. On Thursday of this coming week, I'll likely do my weekly, quarterly premium plan webinar, at which time I will actually show the back test results over the last 6 months, or last 3 years running. How much profit, how much loss, how much initial account size are required, how many consecutive wins during the back test, losses, maximum drawdown. And this will be sortable, and I can make that available to everyone to look at it. And the leadership at near the top of this is really weird. As I think we've gone through a fairly strange period in the markets here recently. Uh, but also in that quarterly premium plan webinar, I'll be talking about a lot of the stuff that I talked about today. It'll just not quite the detail, uh, but I'll certainly be showing some of my buy low candidates to potential subscribers. So if you have any friends that need to take up would like you think would benefit from my work, please send them an email and tell them to sign up for or watch the recording of the upcoming quarterly premium plan webinar, and that's going to be Thursday. Have a great week in the markets. I hope the rest of your holiday weekend is wonderful. And thank you for your subscription, and we'll talk to you soon. Bye-bye.